What's happening, guys? I hope everybody had a fantastic weekend. We have another Sunday video for February 6th and the week ahead. Everything we've been talking about has been being able to be applied the very next day to trading. That's my goal here. You know, kind of preparing you for the week, talking about the type of action that's in the market and, you know, sort of how you can prepare for that and things you need to kind of know to make sure that you are not jumping in on the front side of moves if you're looking to short, or also if you are trying to buy dips and the market turns, you know, kind of being ready, being aware, being on guard. And, you know, one of the things that I just read was Goldman Sachs reports that Thursday saw the single heaviest day of short covering activity by hedge fund clients in a decade. So, you know, while the market may be bullish, it doesn't necessarily mean it's really, really bullish. And I'm not being a bear. You know, I'm always very unbiased and I'm just looking for the best opportunities. But it's something that's worth, you know, taking into account, taking into consideration that, you know, if you start to think that the market is strong because things are going up, just kind of have it in the back of your mind that what if that bid, that underlying bid is just a bunch of short cover, right? And when that ends, you know, what happens? I'm not trying to suggest that the sky's falling, but just be aware. Because as a lot of you saw in 2022, it was difficult for you to adapt when just buying the dip stopped working. And obviously that's been working extremely well over the last couple of weeks. But it's, you know, you're only as good as your last trade. You're only as good as, you know, the next decision that you make. So just be aware, be on guard, and, you know, don't turn, you know, what may have been a good start to the year into a bad one just because you have, you know, sort of a failure to adapt to current market conditions. T-shirt winners, Guitar Nate Dog, and user UR with a bunch of numbers in parentheses SK. You guys got the t-shirts for this week. All you have to do is leave a comment in the comment section. Key takeaway, timestamp, everything you took away from that moment, that aha moment. And the reason for that, one, we make small micro content off of that. And two, somebody else may be reading your comment and have an aha moment too because of what you posted. So really cold outside this weekend. The summit of Mount Washington hit negative 108. And I think the wind chill was somewhere in the 150s, 180s negative. So around my house, it got to about negative 20, which was pretty chilly. And then I think they said probably negative 40, negative 50 with the wind chill. Pretty chilly. Let's see. To start the week off in the room, I was talking, and I think I mentioned it on broadcast last week, or excuse me, on Sunday video. But one of the things in this current market, you know, there's a lot of people that are firing well right now. They're doing exceptionally well. They're taking more and more and more risk overnight, letting these things work that normally maybe wouldn't. But in this market, it's rewarding that. And so sometimes traders feel like they need to play catch up. They're not performing as they should. And they try to copy, you know, what somebody else is doing. They don't understand the risk, right? It's not your idea. It's not your trade. So when you start to copy what somebody else is doing and, you know, you look at what they're in and how aggressive they're being, you have to take into consideration how good their year has been. And if they're pushing down on that gas pedal and accelerating as fast as they can in this current market environment because of how well they've done, that's different than you trying to play catch up and taking those same aggressive positions. Because when it turns, you're not going to be prepared. You don't have the buffer, right? You don't have the buffer which allows them to do what they're doing. So stop focusing on other people and just really zone in on you. And just look, if you're upset, if you're frustrated that you're not performing in this market, ask yourself, how can you do better? What trades can you make? What trades should you have taken? Which ones should you have ignored? And I think that that is really something that separates, you know, how you navigate the markets in this current time frame. Because I just see a lot of people trying to play catch up right now. And, you know, it's okay. If you don't get it, if you need someone to tell you what to do, you shouldn't be in the trade anyway. So just be safe and don't play catch up. Let's see. and the second point with that, and that's what I started the week off, I had tweeted out, just because your bud is crushing it does not change what you do and try to aggressively catch up. It works until it doesn't. They understand how to manage their own trade, but do you? Right? At what point do you cut it off? They gave it more wiggle room because they have wiggle room to give. They've got the padding. You don't. So just remember that, especially if you've been kind of going over in your head how you can improve and how you just have to do what they're doing, this and that. It's not how it works. It's not that easy. Genie, Gene. Ask yourself, remember, right? We've seen this name before. We know they raise. And it's just a matter of time. A lot of times they do it intraday. And I had mentioned that on Scan the night before. For me, I want to get short. I don't want to necessarily anticipate an offering in the event that it's strong and it's trending and it's going, because as you know, everybody gets bent doing that. But if the price action is suggestive of failed follow through and it's giving that opportunity versus VWAP as some sort of, failed follow through, exhaustion move into those levels, then I'm going to participate. And occasionally that preparation ends up with the luck of being in with an offering. So yes, a rather educated guess or an educated entry, assuming that, there's a high likely or a high probability of an offering. And you know what? When you put in the work, sometimes you get rewarded for that. And that's exactly what happened with the Genie short idea pre-market into the 320s exhaustion. And straight down. So that worked out exceptionally well. And that was just a little bit of prep from Scan the night before, being aware, seeing the trade set up. And yeah, the trade was working anyway, but you're rewarded for kind of being one step ahead. Next, I preach a lot about where have you seen this before? And so Friday afternoon, we had HSCS. And so this trade, we were talking about it in the morning. It was nice fade off. But one of the key areas that I was focused on was 235. 235 was soaking. And then it flushed down under it. Late day, it came back up. I always try to remember those key levels. And the way to do that easily is just draw them on your charts. But as we saw it come back up to 325, it started to peak out, failed to fall through, came back, failed to fall through. But each time it was holding a higher low. Finally started to ramp up over 325, and then the squeeze started. So at that point, everyone who got short in the morning who did not cover is now bent. They are now looking for their exits. So for you to just jump right in short is not a good edge, because everybody that was just short is either looking to cover or scale into their position, right? To try to maybe better their average to get out for flat or something like that. We don't know yet. We don't know yet how it's going to act off that first rip. And if it starts to consolidate and trap, we need to be able to, be open to the idea of some sort of secondary squeeze. And that's exactly what we got. And I gave an example of MLGO. So a lot of times what you have is you've got that morning rep, shorts win, but there's some sort of consolidation. Trap, comes back up over that key level, everybody's upside down, squeezes out, consolidates, traps again, and that's the exit move. But you never know where that top's going to be, so you just let them blow out, and once it starts to fail to follow through, a lot of times it's like a mean reversion. It kind of goes right back to where the trade started to squeeze. And that's exactly what happened with HSCS. 330s, ramped up all the way back down to 330s, and then they adjusted the warrants after hours, and it continued to fade off down to the 260s. So very, very clean, just by asking yourself, where have I seen this setup before? Not trying to get cute on the front side, letting everybody else exhaust, letting everybody else pay for that information. So again, see some charts of this, posted it on Twitter. You guys should be familiar with it. I posted HSCS before it even happened on Twitter so that you can review and kind of see how these things unfold. Is it always going to work? No. But you can take an educated guess, an educated trade if it does set up. And worst case, if it stays strong, at least you have somewhere to stop. prior highs, prior resistance point, whatever it is that you went in the trade thinking. CVNA. CVNA I wanted to kind of go over a little bit. That was the first thing I tweeted this past week. And one of the biggest, I would say, differences on CVNA is everybody's expecting it. So it's still going to go. It's still going to ramp. Everybody's on the same page. Everybody's holding. Everybody wants it to go to the moon. But it's almost not necessarily expected, but sort of in a way it is, right? Everybody's already in their minds going to the moon. And so if you go back to Lucid, LCID, the week prior to last, that came out of nowhere. No one was expecting that. And it went nuts, right? It went from 8 to 9 to 10, 12, 15, almost 18. I think 1781 was the top. Now, that was unexpected. We haven't seen anything like that since 2020. And, nobody really had anything to kind of compare it to at the time or sort of anticipate that it was going to happen at that time. And so if you compare it to CVNA, everybody's already in their mind AMC, GME, right? Clove, GME. And the difference is that no one expected that on AMC. No one expected it on GME. Nobody expected it on Clove. And when everybody's on the same page, as soon as things start to settle down, it's going to be a major unwind. It doesn't mean that it's hard on the front side. It's still going to take you for a ride. It's still going to be aggressive. It's still going to be choppy. But when the key levels break, and the two that I gave on that particular day that it cracked, as soon as those unwound, flushed, came back, retested, confirmed, it never looked back. And half of my room thought I was crazy at 18 when I said it was going to go red, but we went red. And it was an awesome trade. It was my trade of the year so far. It's only February, obviously, but it was nice. It was highly probable, and it was a high conviction trade, and it was the main watch. And that's the difference of my goal each year, is to focus on these trades. One per month can make your year, right? And the difference of your preparation on those compared to just your day-to-day kind of trades and sort of practicing execution and practicing good behavior, the difference between those and this one is you focus on those once a month, however often they come up, at that capacity, sometimes twice a month, sometimes every other month. But what they will do to your bottom line is huge. The key is not to be on the front side of the move. And that was my trouble in 2020. A lot of times I was always losing first and then making a bunch back, right? Or most of it back and then, score big. So the key is don't exhaust on the front side of the move. Let everybody else do their thing. So for me on CVNA, scale, 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 cover. Redo it. Scale, 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 cover. And once it finally broke down under those levels, that was it, and I let it work, as you guys saw with the chart that I posted. All right, video topics tonight. First off, we've got another sale to start the year because the market's hot. Everything's been flying. Everything's great right now. So if you are having trouble, if you want to be part of a community that is zoned in, that is focused on quality names to trade, liquid names to trade, high probability names to trade, and most importantly, focusing on what to stay away from, you've got an opportunity. One thing, I had a PM from a member. 5 days in a row, they were losing within the first 15 minutes. And I said to them, what's the easiest way to avoid that? Wait 15 minutes before your first trade. Right? So on Friday, I ended up having a good day. Sometimes the answer is much more simple than you think. And don't make it more difficult. Don't try to figure out all these different reasons for why something isn't working. you might just not be good at reacting to the opportunities off the open. You're either right or wrong. And if you're wrong, you shouldn't be scaling. You should probably be moving on. If you're right, you don't know if it's going to stay, if you're short, you don't know if it's going to stay heavy or ramp right back. So prior to 9:45, 10 a.m., you have to be, reactively trading the opportunity and then proactively covering, right? You're there ahead of time. You're there not looking to be a hero. You're there looking to just take the trade, build up that realize, and wait for the next opportunity. One other comment about one other topic, the AI sector right now. So we've talked about themes in the past, sectors in the past. So one thing that you have to kind of remember is it's not individually about some AI names will raise during this time, and a lot of them will separate from the pack. But overall, there's an underlying bid right now. As long as AI continues, the stock AI continues to go to the moon, then, BBAI and all these GFAI, all these different names that are running off of the AI theme will continue to have that underlying bid. It's no different than when Bitcoin went or when virus names went. It's a general big theme. People want to get involved right now. So dips get absorbed. Dips get absorbed. Normally it pull back, but people are holding because this is a very hot theme and sector right now. So it's your job not to step in front of that, because when it does pull back, you're going to be exhausted and you're not going to want to trade it. So I think AI, if you guys review those levels and lines that I went over on Friday, you can see exactly how they're helpful and how I find the next line. And on the way up, each time it came down, it never breached the prior support level, right? It came in, put in a support level, went up, came back, tested that same level, next line up, right? Did the same thing every single time until it finally breached. And that's when you saw me lean into the trade and we had that nice unwind. Levels will change your trading career. Same deal with HSCS with that 325 level that we talked prior. Another thing right now that's working exceptionally well with the market like this, and something to keep in mind if the market pulls back, again, I'm not being a bear, but if the market ends up pulling back, we're going to have dozens of these meme-ish kind of trades that have been steadily up, unwinding again. So for example, PLTR, QS, PTON, SPCE, RDFN, those are all names that have been kind of running, that were part of the 2020 sort of sector runs or theme, the meme runs. They're all coming back up. And if and when the market ends up unwinding, these are all going to be great opportunities to fade as well. They've been great trades intraday. So find out which ones have the most liquidity. And it's a great way to spread your risk. It's one thing to keep on adding size and size and size on a single name. But if you can spread it across, you're reducing your, one name risk by doing so. And last but not least, one thing I would say that is working in this market right now is if you go back and look at SOUN or FOXO, you've got that first ramp, high volume. And if you've got the wicks on the daily and it takes out that prior high, that's been a very nice breakout setup. So SOUN and FOXO, pay attention to those types of chart setups. We've been seeing a ton of them. And even LACE, LACE, and it's been straight up since. But pay attention to that. It's working right now. We are in a swing style market for that style of setup. But again, be on guard if and when things start to shift. All right, guys, so for the second part of the video, as always, not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. My goal is to get you prepared, show you what I'm looking for, show you what would make me take a trade. And the idea is to hopefully, check that box in your head as to, I see it, and be able to make that choice in that trade on your own rather than having to rely on somebody to tell you what to do, when to trade it, what to buy, what to sell, because that is nothing that we do here. We are not a buy or sell service. This is telling you, showing you how to anticipate what a good setup is and what makes a high probability or a high edge trade. First and foremost, BBAI. This one is likely has some shorts caught. They had the first ramp up, consolidated, and it's had wicks steadily up since. When you have a wick like this, when it ramps up and it fades all the way back down, that's pretty aggressive. And what you have there is shorts getting paid, right? And it causes them to be patient. It causes them to swing that trade. Then when it basically flushes off, came right back, flushes off, comes right back. Then on Friday, you had a T+2 move. So you had a lot of those covers from the day that basically convinced everyone that, hey, you nailed it. You got it right. It faded all day. It closed weak. It's a no-brainer hold. And all of a sudden, here we are. It's higher. All of that volume, all of those shorts are likely faced with a buy-in if they didn't have a solid borrow, or they've got the price appreciation to then potentially squeeze them out. So I think that Friday was mostly short covering. I think that mostly the late day push was exits from intraday shorts, as well as the ones that were stuck from 3 or 4 days ago. That said, if AI stays strong, then none of that matters. However, if AI stays weak, I'm going to stick with that thesis that, in my opinion, a lot of shorts got worked out. And at that point, the easy way to kind of make a plan is just look left, right? 545, we'll call it 550. 550 exhaustion, sit back, fail to follow through. 550s confirms, looking for it to fade. Obviously, VWAP is another key level, which lines up with 5. And you can see that they were supporting it right at that 485 level. Don't make trading harder than it is. Look left, put these things on your chart. And remember, this is the simplest way to remind yourself, because I see a lot of traders, as soon as it flushes, they're in it, right? But you don't know, is that all shorts that just covered and it flushed down? Is it all new shorts that are just piling in, right? We don't know yet if it's sellers. We need to see that it's sellers. How do you know if it's sellers? It ramps back up and it's met with pressure. Ramps back up, met with pressure. More than a few times, not just once, or some sort of big exchange move, which we went over in detail last Sunday. AI. Very, very nice. I went over in detail every single line, walked through the same way that I walked through CVNA to make sure that people were not getting caught up on the front side of the move. And then we got that nice unwind late day. This thing behaves exceptionally well, and you can kind of see, the areas where they're basically holding it. It's consolidating. So if you have a high conviction trade in between these two levels, in my opinion, your risk is higher, right? Because if it's high conviction and you have size, then there's a good chance that if you're wrong, it's going to be an outlier squeeze up or outlier wash under it. So you want to be cautious having too much conviction in this channel area, in this spot right here. Either way, I'd love to see a 2650 sort of blow off and sit back. And then if 25, basically 50s or so starts to fail to follow through, then I'll be looking for a fade. But again, this is a sector, a big theme right now. So this could last longer than you would expect. Just be aware of that. HSCS, another one. This one, so the levels that I was talking about was this 235 level. And then later on, what we were talking about in the room was this 330 level. And so basically, you've got this support system right over here, right? And this is similar concept to the VWAP trap that we've been talking about. So you've got this soak, 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 and then it cracks. And everybody's like, oh, comes right back up. This was a big bidder. If you guys were watching, it was, I think, a 50K bid. Then somebody hit it, and then it refreshed. Whenever a big bid gets filled and then refresh, that makes me pause, right? It's not something that maybe was expected, and they have a plan, right? Just like CVNA. CVNA, when I was talking about the million share bid, they filled it, they flushed it, reclaimed it right back up. That gives you pause. Put the brakes on. Then we've got this 330 level. And 330, you can kind of see it maybe a little bit lower. So like 328, I guess. 330 range is what I basically used. And you can see that it's kind of making this ceiling. And we don't know if that ceiling, if they're going to goalie pull it, meaning 330 gets, swiped, sits right back under, which is what I was thinking, what I was looking for. But we didn't get that because every time it basically stuffed, it came right back and it soaked. The only thing that matters after a stuff move is what happens next, right? And as we talk about every Sunday, if you get a stuff move followed by some sort of soak, some sort of absorption, that voids the stuff move. You see higher low, higher low, higher low, higher low, higher low. Finally, we get that intraday squeeze, and it ramps up through, comes back, consolidates, and then they finally let it go. And that should remind you of exactly of MLGO, which is the one that I had given you guys as sort of a guide to kind of prepare. And that was same sort of thing, sub VWAP trap, squeezes out, comes back to this kind of mean reversion type setup, right? Where it comes back to where it was, and then it finds resistance again at that 310 level, and then obviously it fades off from that point forward. Same sort of thought process, same sort of preparation. All right. That was, HSCS was the first under the failed follow-through section. Second is MGAM. Now at this point, MGAM, I feel like most shorts are blown out. This one was this one worked extremely well with the key levels that we had been focused on. 380s, I believe, was the one that we used a couple days back. And it literally went right to those levels, squeezed out, sat back, squeezed through, sat back, came right back through. And this is not by choice. This is not by like random. Is what I'm trying to say. This is the point of drawing these lines. And you can see the congestion levels where it kind of absorbs for the most part. So, if you are trading size, that's a good spot to, obviously adjust. So at this point, I feel like this trade is likely done because it was running off of MSGM. And when MSGM raises 3 times in 1 week, there's a good chance that the Momo is going to be gone. So again, I don't want to think that it's just going to be an easy fade because it does have quite a few swipes, but reactive trades looking for some sort of quiet unwind. And I think they worked out quite a bit of shorts last week. Peloton, I'm just keeping on radar. This was fantastic. This should look extremely familiar. We've spent a lot of time on this failed follow through setup, and I don't think we've had as clean of a setup in quite some time. And this is, oops, if I can type. This was the level in the room, 1750s, to fade it, and it never looked back. Memorize that setup. That has been a fantastic setup this year. It will continue to be, and you want to get familiar with that. I did forget earlier CVNA on my main watches, but same deal. I'd be looking at the key levels. You can see how they've kind of played a role, very similar to MGAM. Right now, if you are getting aggressive above 1450s, you've got that swipe risk. So you just need to make sure that you're sized in accordingly and you're okay with it kind of ramping up. But if 1450s continue to stay heavy, then it's going to start to open up, and we probably get some downside towards basically 13s, 1280s to 13s before we really hit any reason to bounce, basically. So I'd love to see 1450s exhaust out and then possible fade down to 13s. Other than that, continuation side of things, I've just got some charts that have been working. I talked about this setup, you know, seeing the big volume and then just like this underlying bid in the tape. Just staying familiar with this one, nothing I'm too crazy excited about. IPDN staying familiar with this as well. All the wicks getting soaked up. SOUN is the one that we were talking about, this setup. I am currently long this one, but you've got the swipe, kind of cleans up the chart, and then they start to soak up all the wicks. This should have died this day and then comes back strong. That's why I got long. I feel like shorts are probably stuck. BHAT, notice the wicks. Again, nothing I'm, you know, super excited about, but if this starts to base and it breaks over this prior level, maybe 75, then you've got a chance. You might start to see it float up towards 1 or something like that. I think PALT is a good example. You know, they just kind of sneak, and then you look up and you're like, man, where did this trade come from? Game, another nice daily chart, slowly getting worked up, nice breakout chart setting up. You know, if you're buying this for a breakout, I think you'll probably be disappointed. But if you think big picture and if dips hold versus the 150 level, I think that it could build over time. CAAS still going. This one should look familiar. This was a liquidation trade in the past, but they keep saving it. I would imagine that it ends up, you know, at some point, something like TC. It's pretty much doing the same thing. Same deal with Huddy, where they kind of worked it up until they created a squeeze and then did the raise and walked. I think they're probably doing something similar there. IMX, steady breakout chart. Nice one there. I've been watching just to stay familiar. Again, you can see the big volume, and then since then, all wicks soaked. And same deal with FOXO. That was the other example I gave you guys. And you've got the high volume day, and then since that point forward, the wicks have been soaked. So that's what's working in this market. As far as the continuation side of things, nothing I'm too super excited about, but I'm staying familiar with all those trades. So again, be patient, let these trades come to you. It's a great time to be a trader right now. If you are having difficulty with, you know, what's going on and focusing and trying to find out what you're best at, then take a step back, reevaluate, ask questions. You know, we have the Traders Lounge, so reach out if you're having trouble. Nobody knows but yourself. And you never know. It might be something extremely simple that you just need to avoid. You just need to adjust. And that's really it. Plot the lines. And for everybody that is in the room, make sure you've checked out all of the new features. The high day list that Max has done, the low day list, the one that he's got a new feature that if it starts to just buzz on the high day list, it'll let you know. And it's been really, really nice. And every single day we've got new features. So again, like I said in the prior weeks on video, this is not just a chat room. It's not just about me. This is a technology. We're building incredible technology for members that you're able to use as part of being in the room. So again, make sure you check out the sale today. And next week, I've got something extremely awesome that I've been working on for quite some time, and I'll be announcing that as well. So stay tuned for that. Otherwise, have a good rest of the weekend, and we'll see you in the room on Monday.